Now, as you're looking at this chart right now, what are you seeing? What do you see? Depending on the strategy you are trading, what do you see happening around here? What did you see that happened around here? What did you see that happened around here? What do you see? Okay, now I don't know the kind of trade strategy you trade, but if I draw something like this, okay, and then I ask you to identify this, it's easier for you to identify, right? You say this is a rectangle, okay? Okay, why? Because of course you've seen the pattern, you've seen it several times, and you can easily recognize that pattern anywhere it is, because it is a rectangle. So any form of geometrical shapes is easier to remember because you've seen it often times, so it has been registered into your memory. Okay, so it's easier to recognize pattern than to recognize randomness. Now, for me, what I'm seeing here is that I see a sweep of liquidity, okay, and then I see what's a break of structure to the downside, okay, making this high at that point in time. Making this high what? A protected high, not a liquidity. Okay, now you now begin to ask yourself, if price get back to this place, you look out for what? Sells. Then how do you look out for sells? Okay, you look out for sales based on your strategy you are trading. So I trade harmonics, and harmonics is a combination of structure and Fibonacci measurement alignment. So we have some specific structure which follows some specific geometric structure, and those structure aligns with some specific Fibonacci levels. That is what I trade. So I make sure that my strategy is very what? Objective. Objectivity is what I look at for. Clarity, because I had some questions which I needed answers to, and it was harmonics that gave me those answers. I need to know the reason why I'm doing something I'm doing, and being able to tie your strategy to numbers makes it easier for you. 1 + 1 is always going to be equals to 2. No matter how many years to come, it's not going to change. So that was the answers I was seeking for, and I was able to find it using the concept of harmonics. Now if you look at here, if I put my Fibonacci level from this high to this low, to this wick here, okay, and then let me make sure that this is this way. So if I draw it closer to this point, okay, what do you see there? We see 0.786. all right, from this point, from this high, this is what? A swing point, and then we got what? A retracement, and then this retracement created a new impulsive move which took out that low, and then we'll have a push to the what? To the upside. So this is what we have. And then when you have this kind of shape, this kind of geometric shape in the market, and you were able to recognize it, and it aligns with a specific Fibonacci number, it is called a cipher pattern. And in this instance, this is called what? A bearish cipher what? Pattern, because you're looking to sell. So you can use your XABCD tool from the high to the low, to this retracement, to this extension, and then down to this point. Now, how do you take this type of entry? Since you have gotten your protected high, you've gotten your sweep of liquidity and break of structure, you can do an instant entry at 0.786, because these Fibonacci numbers are dynamic levels of support and resistance in the market, which most of the time market always reacts from. So what you have to do now is to do a instant entry from this point. And then for stop loss placement, my strategy is based on risk to reward, not based on pips. So I don't care if I'm taking 100 pips stop loss. It is all about risk to reward. 1:3, that is the standard for the strategy. So I look out for where I can get 1:3, and then final target, of course, if we remove all of this, because I've gotten the clarity we're looking for, so we don't need other measurements. All we need is just 0.786 at that point in time. So this is what we have gotten. It's off the table. All right, now for your take profit level, we go from this point to that swing point. We look at for 0.786, 0.618, 0.382, and 0.786. So this is our final target, 0.786. And if I look at that, this is our final target. So as price gets to 0.382, you take partial profit and move stop loss to break even. As price gets to 0.618, you can consider closing all your position, and as price gets to 0.786, you are out of the market. It is as that simple. So what am I saying in essence? It's all about recognizing patterns. At every point in time, market will always create some specific patterns. Now, it is not always every time that this pattern can turn out profitable. Most of the times, the pattern cannot be profitable, but almost greater percentage of the time, the patterns always bring successful words, high probability setup. And with the concept of sweep of liquidity and break of structure, you have more confidence in executing trade if there is a harmonic pattern that comes back into that region. So now you've gotten your sweep of liquidity, you've gotten your break of structure. As price returns back into that region, into that premium level, at this instance, you look out for what harmonic setup into that level. So it is just that simple. So this is just a very simple concept which you can be able to use to make consistent profit in the market. So this is just a short video to explain to you guys about this concept. And if I clear out everything now and I ask you again, what do you see? What do you see? So it's all about recognizing patterns. So this will be all for now, guys. I love you guys and wish you guys all the best, and then bye.